Hello folks, Sid Miramontes here with Miramontes Capital's weekly market update. This week's news is new home sales. New home sales are just down slightly, down 3% from month over month from December to January. First month of the year, we didn't expect a big number, so that's kind of in line with our thinking. TJ Maxx reported earnings, and they're up about 6.5% year over year, so their numbers look very, very good. And then finally, again, markets continue to be volatile with oil prices fluctuating up and down depending on what OPEC is saying on how their oil production is going to come out. So we have a close eye on that end, folks. We'll keep on keeping you posted. This week in the news is Mark from Jacobs Engineering question on how does long-term care affect us when we're planning for retirement? Well, folks, I think long-term care has a place for everyone. But some folks prefer not to purchase long-term care. For those folks that are interested in long-term care, there's really two different offerings. There's one where you purchase long-term care, obviously, so that down the road you're not going to have to deplete those assets that you have. So that you're buying insurance so that you're going to get care in the future. And it's going to be a monthly cost for you from today until the time that you use that insurance. There's a monthly cost. It might run for yourself and your wife $500 to as much as $750 on a monthly basis. So for some folks, that really is detrimental to them considering long-term care coverage. There is another option nowadays, okay, where you can put a lump sum amount of money, let's say $25,000 in a policy that you can withdraw in the future if you decide not to use the policy or not use the insurance. Lots of times when you buy insurance, when you buy something, well, the money's gone and the insurance company is going to keep it from that point on. This policy nowadays, you'll have access to draw your funds back if you do not use the funds. And if you decide to start using the funds in the future because you're going to need the insurance, well then, of course, you're not going to have the access to the capital, but you're going to have access to the services. Finally, if you pass away and the money stayed in that plan and you never used any of the insurance, you never were in a convalescent home or had home nursing, well, that turns to a life insurance policy for your beneficiaries, so someone will always receive those funds. So there's really two different options. There's the monthly option where, hey, if you feel you're more comfortable paying the life insurance, or excuse me, the long-term care insurance monthly, then that's the option that you should take if you feel more comfortable with that. If you feel that, hey, the monthly expense is too high and I'd rather put a lump sum of money in the plan and have the access to be able to pull that capital back in the future, the second option where you put a lump sum of money in would be the better option for you. So with that and any other questions, folks, please give us a call. Obviously, it's tax season. Bart, our CPA here on our team, is welcome to answer any questions that you have. And if you have any questions for us, please call us.